Playtime is over. Get your Prepared Mind merchandise to show your support for the channel, stop censorship, and to tell YouTube they can smoke it. Get prepared now. Welcome back to the Prepared Mind channel. I'm John. I am your host. Thank you guys, of course, for coming over to Patreon, hanging out with me. Today, I brought out the board of truth because some days I just need to get a little more technical, and when I get technical, I want to have it in a way that, one, I can remember it, and two, we can kind of look at things, kind of get into it a bit. So, let's get into it. All right, I brought my glass of scotch because when I talk about the economy, I like to relax. And there's nothing like a Glenlivet when you're talking about the destruction of the U.S. economy. And even with the scotch, I'm just as qualified to discuss information as a physical therapist or a nurse, a TV commentator, and probably I'm just as qualified as a real live certified bona fide financial advisor. Why? Because they're advising people to continue to put their money in unsafe places. So let's get down and talk about it. This is a graphic representation of the Dow Jones, starting at 08 and going to 18, basically starting at 10,000 and showing the scale up to 35,000, right? So what I find interesting about charts and graphs is you can draw them and scale them in such a way as to make them look really good or really bad. I think what I've done here is drawn 10 years and just making it look like what it is. A strong, steady, gradual increase for 9 years. And then the last year, right after Trump was elected, up until February of 18, we saw an even sharper climb, right? We grew an incredible amount in just 1 year, right? 25% increase overall in the Dow. And then we had this hiccup, and that's where I kind of show it going red, right? And then I blew it up over here. That's a bubble within a chart. I felt really technical when I drew that. We're doing exactly as prescribed with every stock market crash that has occurred going all the way back. You hit the peak, it comes down, you get 10% correction or so, and then you get ups and downs, ups and downs. Basically, though, since the 10% correction, we've been traveling sideways, flat. That is very standard. It could go up again. In fact, it could go up to 30,000, 35,000. But that doesn't mean we're not in grave peril. What that means is people are shoving money on Wall Street. People are fighting over it, right? And people are making money. The only people that make money on Wall Street, though, are people who sell. You see, you can own anything you want and give yourself any value you want, but until you sell it, its value is nothing, right? If it's real estate, it's the value of the dirt. But if it's a stock, a bond, a portfolio, basically it's not even paper anymore. We call it paper, but you don't get stock certificates in the mail. You just hold on to them electronically. You're holding electronic nothing. Anyways, this is standard. This spike up and down for crashes like 1929, like 1987, like the tech bubble. That was an interesting looking crash. But the 08 crash back here that brought us down, that was classic hallmark. Peak, drop, a little bit of sideways for a while, and then crash. We're seeing the exact same pattern. What we don't know is, will the pattern last 6 weeks, 6 months, or a year? We just don't know, but it's coming. What I found fascinating when thinking about shit hitting the fan is we're getting more and more financial advisors doing my job, stepping into my world. It's funny as fuck listening to them, because they'll talk about the stock market, they'll talk about bonds, they'll talk about investments, precious metals, all kinds of stuff. And at the very end, they'll say, hey, you better get prepared. Have some food around. Right? Yeah, that's a good idea. Make sure you got food just in case. And it's hilarious to me that they go, I'm not one of those crazy prepper guys. I'm not crazy. I'm not a prepper. I'm not psycho. I'm not one of those weirdos. But you better get some food. Fucking hilarious. These fucking people are apologizing for thinking. What kind of thinking is that? Well, they're people who are afraid of other people's ridicule. I don't give a shit anymore, because I know what's coming. And that is good. Good scotch. Good God. Okay, so, like I said, a lot of times I'll just say, hey, the economy's shit, and give that as a reason why you should be a prepper. Why you should have not only just a little bit of food, you should have 3 months of food minimum. You should have access to good water and the ability to purify or sanitize it. You need the proper clothing. You need some medicine on hand. And if you got prescription drug, you need that. Right? You need a bug out location. You need a bunker. You need good location, good housing, something to protect yourself that you can defend. That's in an advisable location, or the best you can do, the absolute best you can do, and you need a means of self-defense. Now, do I sound like a radical crazy person? What the fuck is going on in Venezuela? They've had an economic collapse. They've slid into a place where they have a currency crisis. They now have hyperinflation. They have a lack of resources. Do you think the Venezuelan people wouldn't mind having an AR-15, the deadly AR-15 around? You bet your ass they'd welcome it along with a box full of high-capacity magazines. Probably some of those deadly bullets, Wow. When you need it, all of a sudden, you don't sound like a fucking lunatic. And I'm not apologizing for thinking and seeing what's going on and being prepared. Not just with an extra can of soup, but truly being prepared. Okay. I don't want to pick on them too hard. Right? I don't want them to poop their pants or maybe insult me because I drink scotch. Once again, I'm every bit as qualified as they are because I can see what's coming too. Right? I can read the fucking tea leaves just like you. But rather than just say, hey, the economy collapsing is one of the things that makes us a prepper, understanding that, I wanted to go into more depth about it. Right. The Dow. The Dow was on a steady up since '08, after the crash. Since '08, and even more steeply since Trump was elected, the Dow rose. Right? That is completely unusual. It's non-typical. In fact, it makes very little sense considering some of the other things we'll be talking about. But what they've done, and they've managed to stage manage, is quantitative easing. Basically throwing money at companies. They've thrown money at companies as needed, and those companies do what? Well, they've bought back their own stock. They've, in essence, created a shortage of stock while the country's trying to recover economically, and they have nowhere to put their money except Wall Street. Why? Because interest rates were at record historic lows. When you can only get 1.5%, 1% on your cash at your bank, and inflation is 3, 4, 5% annual, where are you going to put your money? You going to leave it in the bank and lose, or are you going to send it to Wall Street where they're showing a steady increase and a win? Right? Because everyone wants to be a fucking winner. That's what they do. The only place you can put your money now and make it grow, right? Become rich and wealthy, fabulous beyond your belief, is to send it to Wall Street. So that's what they've done. They've manufactured it using your tax money, allowed these companies, a lot of them, to get themselves out of debt, right? Make themselves look terrific, especially companies like Facebook, which makes nothing. Apple, which makes phones, right? Netflix, which sells nothing. Right? You may have noticed I'm going through the FANG stocks. Amazon, which fucking makes nothing. Right? You want something from Amazon? They don't make anything. They warehouse it or have it drop shipped from the manufacturer or from another warehousing company. Amazon. And I know that the preparedmind.club, our website, we use Amazon. Because, hey, people go, I don't have enough money. Fine, I get the cheapest place to get it from. And people go, oh my God, you're a sellout. Give me a fucking break. Right? We've got to do something. At this stage of the game, this late in the game, seeing what's coming, you don't have a lot of time. If you need your shit, get it now. Right? It could be next week. It could be next month. It may be next year, but I fucking doubt it. It would be the summer of 2019. That would be 18 months after we hit this peak in February of 18. So we've got this coming. We're not making anything, right? The Dow has been up. We had a major crash. There is no way we should have seen such a huge recovery, except this really isn't the economy. This is the stock market. Basically, this is like an auction where people are bidding on a commodity which is nothing. It's a stock certificate. It's a bond, a junk bond, right? You're financing companies, and people are just competing to buy them. This isn't an indication of economic growth. In fact, we're going to get to more of that down here. Why am I saying we need to really look at the economy right now? Because it's the fucking spring. Shit is supposed to have sprung. Right? But we're not seeing it. Right? We are overdue for a recession, in other words. Right? We should have had a recession at 12, 13, 14. Wait a minute. They used QE, quantitative easing, to pump a bunch of your wealth, your children's wealth, your grandchildren's wealth, into this economy to hold it up. It's not even real economy. It's the appearance of a real economy. Right? We're overdue for a recession. Usually it's every 7, 8 years. Yeah, that's about right. We've gone 10. But we just got our bubble. We just banged off the ceiling in February. Right? So number 3. This little chart is a representation of where we were. The VIX, the Volatility Index, which indicates the complacency, the stupidity, the lackadaisical, the apathetic attitude of the investor. The VIX, it was incredibly low. And then pow, in that February, it spiked, came down, spiked again. And then it came down. Whoo! They got it settled. And it's slowly been trickling down. Today, it was up a little bit, but it's been slowly coming down, down, down. We're almost back down to record lows. Record lows. After seeing this. After understanding the only reason we have any economy is because of this lie that has been told. And the borrowing from the future to deal with today. Right? That's the only reason that this is happening. People are so asleep at the wheel, it's fucking disgusting. So now let's take a look at the 10-year bond. In the last year, 365 days, since this time last year, right, the bond yield has gone up 40%. Now you go, hey, look at that, John, growth. No, the bond yield going up isn't necessarily good. In fact, you could point to it and say it's really fucking bad. It's gone up basically not 0.85%. There's a little error, a faux pas. Let's blame the Scotch on that crazy guy who doesn't know anything, and he should just shut up and leave the expert decision-making to nurses and doctors and dentists and everyone else who claims to be a fucking expert who really isn't. And they're not experts because as soon as the crash comes and they get their ass burned, guess where their investments go? Right in the fucking tank. That's right. In the '08 crash, everyone lost. They lost 50% of their shit. So much for the fucking experts. In fact, the experts are the people who get out ahead of time. That's the sign of an expert. Someone who protects their wealth when they see the signals. All right, so 0.85. Almost an entire percent in the last year it's come up. Right? The problem is that's 40% higher. Now, You can go, but John, it's just under 1% in the last year. It's just 1% in a year. Yeah, but if you look at it in terms of percentage points, 40% up. That's the cost to finance stuff, right? That's what the government, right, has to pay on its 10-year bonds. Now, these numbers, the 2-year, the 10-year, the 30-year, the prime rate, the lending rate, the interbank lending rate, the LIBOR, all that shit, they're all traded a little different and factored a little different, but they're all basically traveling the same with each other. They go up, they go down. They follow each other relative to each other. I like the 10-year bond because it shows me right, for my brain, my thinking, what I follow, right the fuck where we're at. It's come up 40% in 1 year. Just today alone, it closed up 0.08. That's 8, and I love how they call them basis points. Almost 1/10%. In fact, it was 1/10% today, but it dropped back down. Now, why is that important? Right? Today it went up 2.8%, 2.84 to be precise, in 1 day. Now, if the cost to finance my business is the percentage rate, and it went up 2% in 1 day, or 3%, or if it went up 40% in a year, you could look and say your financing charges for your corporation, your company, your manufacturing, whatever the fuck it is you do, if it goes up 40%, you go, holy shit, it went up 40% in 1 year. So if I have to pay, let's just say, $100,000 a year in finance charges to fund my company by borrowing, and it went up 40%, that means over the last year I've had to pay another $40,000. Well, that's no big deal if you're a multi-billionaire. Well, it's a big fucking deal if you've got $1 million company and you just raised your expenses, right? We're not just talking about the cost to pay the money back, but the interest on top of it goes up 40%. And we're still near record lows. Now, there's a problem with this. There's lots of problems with the interest rate. It's not just the interest rate, good night, I'll talk to you later. It's the interest rate. This is reflected in the cost to buy a house, the cost to buy a car, your credit cards, student loan debt, personal debt. Right? If you've got a variable rate mortgage or loan of any flavor, that 40% increase in 1 year, well, it's small because we're talking about such small percentage. But historically, it's been up higher. 6%, 8%, 10%, 12%. Back in the early 80s, 20%. Can you imagine taking your debt today and go get a calculator online and factor in, instead of 3.5% for your mortgage, put in 18% and see what your fucking payment is over 30 years. Now see, we've already accumulated the debt. All they have to do is change this. And it has to change. It has to go up. It can't sit where it's at right now, which is 3.08. It can't sit there. Why? Because the Fed has been announcing inflation. Who the hell wants to get a return on investment of 3%, which is actually really high compared to other nations' sovereign bonds around the world? U.S. pays a handsome dividend compared to other countries. But what is 3% when inflation is 5%? You're still seeing a net loss. The only people that can afford that are central banks and governments who aren't spending their own fucking money anyways. They're just interested in pushing this sham along while they hope and pray that things magically fucking fix themselves. Now, once again, we're talking about the macro. Governments, central banks, major corporations. Let's bring it down to the macro. Talking to people at work all the time. I talk to people on the street. How's it going? Well, I got this going. I got that going. I go, well, why don't you just use your credit card? I don't have any more. Oh, just go borrow from the bank. I can't afford it. I can't afford those interest rates. It doesn't work. People don't have money. They're fucking broke. You know, and I talk to wealthier people, I guess you could say, people who make a good middle income. They're doing all right. And yeah, they can get funds for stuff. They're fine. But you raise that interest rate, and it's going to choke people off. Already we're seeing massive problems, and we'll get into that some more too. But this 10-year bond, The bond rate, the interest rate, everything is reliant on borrowing money. Why the fuck don't people save money and have money? Well, number one, it's all in Wall Street. Number two, there's no interest rate for it. So nobody is saving. There's no accumulated wealth. Wealth is savings. Wealth isn't debt. It's fascinating that they've convinced us now that if they make debt cheap enough, you can get a lot of it. And then that represents how wealthy you are. Look at that guy. He's got 3 fucking houses, 6 cars, right? That guy's doing great. No, he's not. He's in debt over his fucking eyeballs. Guy needs a fucking snorkel to breathe. This is what we're looking at in our world. This is reality. Like I said, you don't have to be a rocket scientist. In fact, you can be anything you want, and you can still learn this shit. Like I said, you don't have to have a degree or a certification or some fancy fucking letters after your name and pretend to be brilliant. You just need to start looking at this. So I wanted to share these ideas with you and say the economic collapse is coming. It's the spring of 2018. And what have we learned lately, right? Corporate debt is on the increase. They're borrowing money for dividend payments. Isn't that incredible? There's corporations out there. How about this one? This is one that's pretty well known. This he's fascinatingly rich. He's a billionaire. It's all on paper, by the way. It's bullshit. Tesla. Just say the name Elon Musk and you're supposed to what? Get an erection? The guy is in debt over his fucking eyes. The only wealth he has is relative to the value or price of his stock, which is inflated unnaturally. It's manipulated. I mean, I like the Elon Musk guy. He seems like a relatively interesting person to watch, but he's in debt, and they have to borrow money in order to pay the dividends they've promised to shareholders because their ideas are so good, yet these companies aren't making the money they need. Companies like Tesla, Chevron, Exxon, Ford. Back in 2008, we had massive problems. Massive problems. Automotive manufacturers closing down lines, a series of cars, entire names, labels. Like, you can't get a Pontiac anymore. Crazy shit like that. Ford just announced in the spring of 18 that they're just going to stop making several different cars. In fact, the only sedans or automobiles they're going to make are going to be the Mustang and I think the Focus or something. Right? The bottom line entry car, a sports car, and everything else is going to be SUVs and trucks. And then, of course, industrial equipment. But they're cutting a swath, a huge swath, out of their line. If everything is so fucking great, we've expanded, well, on the stock market anyway, by 100% in the last 10 years. Over 100%, because we were down at like 11,000. Double that and then some to get to this 26,000 peak. If things are so great, we should be opening up more automotive manufacturing. More industry. But it's not happening. These major corporations are having to borrow money to pay dividends. They're going in corporate debt. Chevron is a great one. Massive company, old money. You know, they've gone up to like $3 billion over, I think, from 2015 to 2016. Who knows where they're at now? Who knows if they're at 38 billion or 41 billion? I haven't looked and I don't really give a shit. Because in the last couple of years, nothing has changed. And that's the problem. You come down here, the economy is not fixed. They never fixed anything that went wrong in 2008. That was created back, literally, our problems massively were changed and created in the 90s. When they dropped that interest rate from 8-9%, pow! They brought it down to 4%. They made money cheap to spur people to go into debt. They chased them out of banks because you can't get enough money in banks to beat the inflation rate. But it chased them out of the banks and chased them to Wall Street. And since Clinton took over, pow, the stock market went up. Skyrocket up. Right? So nothing is fixed. Nothing ever changed. All they've done is piss a bunch of your money at the stock market. Bonds and the inflation, that ratio, bonds have to go up. They have to go up. Because inflation's going up. Otherwise, everything you do is a losing proposition. Save cash, losing proposition. Put your money in the stock market, it's going sideways. It's going to go down. Everyone is going to go down. Everything is coming down. It's slowing down. This train is coming to a grinding halt. Right? What else? Why is the economy not fixed? Well, because the stock market is not real. Derivatives, ETFs, right? Commodities. It's paper. They're not making anything anymore. We need to, grow food, mine resources, and then make them into something real. Industry. The stock market is not industry. Accounting isn't industry. Those are functions of successful industry. When you have a good industry, you have, or should have at that point, a stock market. When you have good industry and growth and real economy, that's when you need accountants. Now, they treat the fucking tax and accounting industry as like it's real. It's not. They don't make anything. All they do is take. They suck money out of the industry that we have in order to pay their salaries. It's completely off the hook. Off the hook. Everything that takes money out. Taxes, Wall Street, inflation, all of this is stealing our wealth. Nothing is real anymore. Derivatives, ETFs, paper, it's bullshit. If you want something real and you want to invest your money in it, go buy some gold or silver. Go buy 1,000 pounds of rice. Go buy something real. Because our economy, it's smoke and mirrors. It's bullshit. It's song and dance. It's snake oil. It's lies. All of it. And it's coming to a halt. It is springtime, and we're seeing this type of stuff. Corporations going in debt. Corporations faltering. Even the supposed gauge or measure of the economy has done its stunt. It's going to start coming down. So the reason I'm going through all this is to get a good look, right, at how asleep people are with the VIX, where the Dow is at and what that means. Why are bond rates going up and why is that not good? Well, really, we do need to be at 8%, 10%, 12% interest on borrowed money. But if they raise it much more, people already don't have money because they're so far in debt. We're that tight. Tight! It's that tight right now. People don't have money. And the economy right now is sputtering. The real economy, that's manufacturing and industry. All right, so I'm going to let you guys go. Keep this in mind. What's really important at this point is that we share all the ideas we have with people we know so that they can get prepared. Just like all those smart guys with certificates and degrees and all their experience are saying, you should probably start getting some food together just in case. Aren't you glad you're a prepper? Because chance favors the prepared mind is yours. Godspeed, Semper Fi, and I'll talk to you soon.